pretty basic theme for the past couple months. I've been really focused on small caps. Haven't been doing much on the option side, or the large cap side. I have been trying to get some more trades in on the spies and stuff like that, as a little bit more recently. And just I've kind of committed to myself to making at least one spy trade a day, just because I'm trying to get better at trading the broader market. But definitely an interesting week. I've been kind of mobile since the lockdowns and everything, so I've been kind of bouncing around from place to place. Currently in Corona, California, just with my mobile setup. But
Hey, Corona.
hey, but so this week, I'm gonna look. Just need to look at my trader view here and just kind of filter some things out to get some stats. So far this month, I have my current win rate is a strong 54.7%. My average hold time for winners is just over an hour, and my average hold time for losers is about 19 minutes. Okay, so my biggest winner was actually yesterday on USWS. This was a good ticker that I was able to fade, get a little bit of hits in pre-market. You can see on the chart with that one on Wednesday. That had some news in the middle of the day, shot up. I ended up getting ran over on that. I was short early, but then I ran into some really terrible route issues. My route that I was using at the time got pretty much frozen, and I got stuck in two halts. And granted, I was only in like a quarter to half size what I wanted, but scaling into just under 50 cents and then getting finally stopped out in the 80s on that was the result in my the biggest loss I've ever had. But then yesterday, yeah, we'll go over USWS, but I just wanted to give some context. So with BIOL, like hitting my biggest loss Wednesday, and then being able to like process that and come back, and then actually yesterday being my biggest winning day that I've ever had, and that USWS trade being really good. And so I can actually post this. I can't give any because I do work for a firm. I can't give any numbers or anything like that. It's here. So since Corona, we've had quite a volatile market across all spans, with small caps, large caps, mid caps. So there's opportunities everywhere, but there's also opportunities to blow up every single day. And so that's why I kind of always try to reset my mind back to risk management. Okay, so I take a fat loss Wednesday. I process that, but I don't take it into the next day. Because in the market that we're in, and I think it's the most recent Chat with Traders episode. It might be, there might be a newer one, but the one with Nishant from Kirshner Trading. He talks about this is the type of market. This is where you stand up and you show that you have the balls. Now, granted, if you're new, that's not something that like you should be thinking about. But if you've been trading for a little bit, this is definitely the market where you need to be putting on size. This is the market that we kind of as traders we wait for. We could have months of just really small, slow, consistent but smaller gains, and then we hit a market like this, and then this is where we really need to hit it hard. And so for me, taking a loss just even on one trade is that for me should not dictate, because what it is it's an outlier. One trade is an outlier. One bad trade is an outlier. So one of the best things that I've heard, comes from Mark Douglas's book, Trading in the Zone, where he talks about, your that last trade not dictating your next opportunity, whether it's really good or really bad. I always try and get myself back to that emotional baseline, right? And so if I have a really good trade, I might have a real spike in excitement and and really be super stoked, and that can affect my mindset for the next trade. And so um, I allow whether it's really big or really big trade or really bad trade, I try to always get myself back to that emotional baseline, especially going into the next day. I don't want to be thinking about what I did yesterday unless it's a repeated mistake that I'm trying to fix. But as you can see, like on this gross daily P&L, is what I'm doing in the market currently is working, right? And so taking one bad trade like I did on Wednesday, that's a total outlier trade. Whatever I did wrong is an easy fix, right? And that shouldn't happen again. For me, that route issue, I don't ever use that route again. Like that route is dead to me. Um, and so I use different routes. That way I don't, I can't make that excuse again. But that was just kind of my thought process going into it. So we had someone ask, I have the chart pulled up. Can you please describe your thoughts process on USWS entry, exit, and why? So USWS, we've been seeing, because the market's been dropping, everything's devaluing. We've had obviously a nice bounce recently, but now that we're getting a good bounce, we're starting to see sectors get these crazy runs. If any of you saw ICD yesterday, that thing went from $2 to $13 in a very short period of time. And you saw some other financial stocks make runs. You saw some drilling stocks yesterday. I think that's what ICD is drilling. And so we had a lot of drilling stocks that were running up yesterday, and this US Wells Services. I didn't dig too much into this company. With small caps, normally what I'm doing is I have a watch list. I'm digging into the filings. I'm looking for things that stick out to me, maybe red flags or maybe green flags, on creating some sort of bias, I guess, on how I want to play this. Now, watching some previous tickers from this week that have done the what do we have? We had MBRX, we had YG, those stocks that went from 20, 30 cents to multiple dollars, running 400 or 500% in a single day. For me, I'm looking to fade those moves because those aren't sustainable, right? So I'm looking for the opportunities for weakness. On USWS, the story was told in pre-market for me. We see this big run up in after hours the previous day, which I didn't even see. I didn't see this until pre-market the next morning, but we see it, top out over 2, see some resistance, and there's no real volume traded on it, right? Until the backside, right? Until the backside, we start to see a little bit of volume come in on pre-market. And for me, that volume is confirming the move, right? On the way up, it was just kind of lifted up on air. And so I'm looking for selling pressure, right? And so what I really love is that we see this big spike up, and then this a pretty big retracement. It gets to 2 and then retraces all the way back to 1 almost, but there's still a lot of meat left on the bone. So I'm getting I'm starting to get short in the 120s in pre-market a little bit. I stopped out half when it reclaimed over 125, but then I got back in when it kind of formed in on a wick. So looking at the 5-minute chart, you kind of have like that wick over that 125 area, and for me, it's not sustaining over VWAP. The selling pressure is still heavy, and then it starts to pull back over that dollar, get a little bit of a bounce, and then you just see that it's starting to squeeze and get tighter over that level, and when eventually we get the break. And so I'm just adding size over that dollar until we get that that break. And then I think my final covers were in just like at like 69, 68. I didn't make it into the 50s. I know it faded the rest of the day, but I kind of ran out of patience by that time. The volume had died down after the morning and stuff. But that worked out to be, I had some pretty strong conviction on it. I've seen this pattern before, and there was no real buying in the name. It got lifted up pretty much on air, and whoever, and most people who may have been in this probably wanted out. So I can't, I try and keep it as simple as possible. Was USWS alerted on a scanner you use? No, I mean, I have trade ideas. So we use trade ideas at the firm. Ocean Grove, I didn't see your question. We'll get back to that. We have trade ideas, and we have sections for small caps and things like that. And obviously that one was, I think, number one on the gainers. And so just took a quick look at it. Didn't even look at the filings at all. In this market, I'm not doing a lot of filing research because a lot of things just are running on nonsense. And so I don't want to have like some super strong bias, like, they have an authorized share count of 200 million and they only have 100 million, and they just dropped this S3. It's like, it doesn't matter at the moment. Like, things are just running. Doesn't matter if they have an effective shelf, or they have any sort of like convertible debt or anything like that. Eventually it does, but when these things, we're making masks, we're making ventilators, with the small caps, these things are just, they're losing the hype a little bit, but the hype's still there. Let's see, Ocean Grove, can you talk about how you bounce back from your biggest loss to having a big green day? What helps you the most with your trading psychology? So, I was actually having a conversation with my girlfriend not too long ago, and she just got back from the Peace Corps, and so we've been apart for a little while. But I used to internalize losses and take them personally, and I would take them to bed with me, and I would. Okay, cool. Thanks, Ziggy. And I would lay awake and just think about that trade. And then on the other hand, I would also see a really good setup that was setting up for tomorrow, and I would just be super excited to hit it. And I just couldn't wait. And usually it would never, when I would get too excited about a trade, it was usually a red flag. And so when I'm getting too emotional over my wins and losses, is when I start to skew my risk management. So I'm not, because I'm thinking based off emotion rather than thinking, rationally. So one of the best things I've learned, especially since, so I work for 7 Points, and if you don't follow Mike Katz on Twitter, he's probably still my most favorite follow on Twitter. Especially when he does his trader takeaway videos. He's just super experienced, but he is so good at controlling his emotions. And he talks about, and I'll try and find it. Let me just post this tweet really quick. So he goes, to be a good trader, you have to stay even keeled. When I'm doing good, I tell myself you're not as good as you think, relax. When I'm doing poorly, I tell myself you're not as bad as you think, relax. And that sounds super simple, but it's super hard for us to do, right? And I think what it comes down to is time. Like, you're not going to be perfect at managing your emotions right away. It feels great to hit a big win, and it sucks to lose, a big amount. It just does. I remember when I blew up my first account, like the gut wrenching feeling I had for like weeks after that. Oh yeah, you feel embarrassed, like you don't want to like show your face to people, even though they don't know. And your non-trading buddies think you're crazy, and you're throwing money in the market, which you kind of are. But for me, that was a process in which I had to go through to learn that, my emotions are really my worst enemy. And so, you know, Wednesday I take this big loss, and I'm not gonna lie, with that route freezing, I was tilted in the moment. I was like, what the fuck? What is going on? Like, what? Why is my order not just fill me, get me out? And it wasn't working. Then it was halting, and I'm just like stressed out. But then, when that bell rings and the day is over, I have to leave it all there. Um, I and it's the same with a winning day. Like, I have a winning day, cool. I can takes I'll get some congratulations from the guys at my firm, like, dude, awesome job, whatever, cool, awesome. It was just another trade, on to the next. That's the attitude that I have to have. um, after any big fluctuation in P&L. I have to keep myself at that emotional baseline, or else I'm going to start trading based on ingredients that make a really, really shitty meal, if that makes sense. And so Mike has, like, so with this thread that he posted, this is just one part of a thread. He talks about, in other parts, like, thoughts that you have after losing periods, like, I suck, I'll have to find a job, I have no other skills. um, or after a big win is like, oh, I finally figured it out, I can do this forever. Those are the thoughts that you have to get out of your head. You had a good win, great, what did you do right? But what could have you done better? Shoot, you had a really bad trade. Okay, first let's figure out what was right about this trade, then let's pick apart, like, what was wrong. Right, we have to look at it super objectively. Or else, like, if your trades are causing you, like, a ton of pain, like, you need to step back, either size down, and really stop the bleeding. So, funny story is, like, I think it was maybe like 3 years ago. Me and Lucho, had become friends and whatnot, and I was just having a really hard time trading. I was, having a stretch of months where I was just bleeding cash, not really fast, but just slowly, and it was super frustrating. You're taking one step forward, two steps back, one step forward, two steps back, and that can really wear on you over time. And I had a sit down with Lucho. We were in Arizona at some restaurant, and I told him, I was like, dude, man, my trading has been crap. And this is really, like, the first time I had, like, fully admitted to myself that I was like, what I'm doing wasn't working, because I would get those small stints of, I had some really decent green days, but then I would just give it back, and then commissions would start to eat me up, and whatever fees, things like that. And so and basically what he told me was like, okay, like, first off, let's stop the bleeding, like, let's figure out, like, step by step, um what is causing you to take those two steps back instead of keeping that one step forward that you had gained, right? And so what the steps I took was that, one, I sized down. If you're bleeding cash, there's no sense in like increasing size and trying to revenge trade, and that's how blowups happen, right? So uh, basically, the steps I took was size down and just practice some new strategies. Because the strategies I was using were very inconsistent. They were very indicator driven, and I kind of moved from this indicator driven trading strategy to learning more about price action, and I really just spent a ton of time on tape reading. And not to say that, like, indicators don't work for people. I think Lucho has a really good
I do
uh,
indicators a lot.
yeah,
It's only the same ones every time.
yeah, but he's built a really good system around it. And uh, for
Price
me,
action, I'm also, of course, looking at price action. Like, I may take the trade based off of the setup that I like, But
Right.
if the price action isn't agreeing with me once I take my entry, I just get out.
Right. Totally. Yeah. So yeah, even though he's using things like ADX and a moving average or something, he's still looking at looking for things like exhaustion,
Exactly. The price has
buying
to
near
be
supports
agreeing
and
with what I see. If the price isn't agreeing with what I see, then it's not going to work.
yeah. So for me, like and I think I was trying to replicate something like that back then, and for me, like I just had to find I had to find my own way, right? And so this is something that I talked about last time that I was on here with TJ, is that one of the biggest things for me that's the and I heard this actually at the Traders for a Cause event in Vegas last year. A speaker talked about, I think it might have been Joseph Fahmy. He's on Twitter. He's a super funny guy, but he was talking about how in trading, like one of the things you have to learn quickly is that you trade on your own conviction and you don't borrow others. So basically, if you're trading based on alerts or you're trading based on someone else's style, it's eventually not going to work for you, because one, the market constantly changes. We have to be adaptable. And so if you just learn one strategy and you cherry pick it off of you just literally copy someone else's, and they're good at adapting, but you're not, you're going to be stuck with this you're going to be stuck with this strategy that no longer works in this current market. And so we have to constantly be adaptable, and we have to trade based on our own conviction, right? And if your own conviction isn't working for you right now, that's fine, right? But like, you have to figure it out for yourself, what's working and what trading styles differ, personality to personality. So for me, I'm I've found my niche, mostly in small caps, but as the market changes and I grow and change, I've started to develop option strategies that I really like, in large caps and stuff. And until the coronavirus was going on, I was trading that a lot. But coronavirus hits, and we get a lot of volatility in the small cap market, where I have a ton of experience trading momentum in small caps, and if momentum and liquidity is there, that for me breeds opportunity. And so it's just recognizing those things as you go. Okay, so we talked about Ocean Grove's thing, and we can talk more about trading psychology in a little bit too. How are you deciding which tickers to watch? Where are you narrowing down your choices? So that's actually a really good question. You know, how are you deciding which tickers to watch? For me, I'm obviously looking for things that are, if let's just say I'm looking at small caps, usually I'm looking for things that are gapping up. I'm probably shorting probably more like 60% of the time now. It was probably closer to 80. But I've been doing a lot more longs as well in small caps. But I'm using a scanner, and how I'm narrowing them down. For me, as of recently, because I've been increasing size and scaling up in my trading, I've had to really be more selective on what I trade. I don't trade micro floats anymore. I don't trade the super low floats that may have a $15, $20, $50 spread. That for me, it doesn't fit my trading style. I like trading things with really tight spreads and really good liquidity, but may move in big percentages still. Like, what places are you finding your information from? So for filings, I use bamsec.com. And then I use like FinViz for quickly looking at like the the flow and insiders and things like that. And then I using Trade Ideas as the scanner. Was USWS alerted on a scanner that you use? Oh, we talked about that. Yeah, that was on Trade Ideas. I feel like most of the time when I think I know what is going to happen in the price movement, the market always proves me wrong, even if I have all the indicators up telling me. Okay, so it's good that you're. I'm looking at Pop the Builder. It's good that you're using the R system. If you're not using the R system, I highly recommend reading Van Tharp's book. I'll link the Amazon link here. If you don't use the R system, I highly recommend this book by Van Tharp, Trade Your Way to Financial Freedom. It's a kind of a cheesy title, but it is really good, like on drilling risk management into you and using the R system. I use the R system. I think most of the guys at my firm implement it in some way. And it kind of takes the idea of like the dollar out of your head, and you look at it like our units, like Pop the Builder's kind of talking about here. So I am so burnt out, not even know, how do I fix this? Should I increase my risk unit and scalp instead of aiming for 1R? I have a small account, so commissions will totally eat up my account if I go in small. Here's what I recommend. I like that you're I'm not a big person, and like I think if you're new to trading, paper trading is good for like, maybe the first month, but trading real money, learning how to use emoji, but keeping it small. So if you have a small account, I wouldn't necessarily worry on how much compounding you're doing. And I know that sounds counterintuitive, like that's what we're here for, like we want to compound our gains, but like you're not going to be able to compound your gains even if you have a large account if you can't learn to trade small size first. And so I would worry less about the commissions that you're paying. Maybe find a commission free broker if you have a small account. There's plenty out there's plenty of options out there. I'm not sure what you're using to avoid those, but if you need to, if what you're doing isn't working, like sizing down is usually the answer.
Yeah, if you're consistently losing, just you need to be trading small.
Yeah, and if you're using, I think you were talking about using indicators. Indicators are a funny thing. They give you pieces to a puzzle, but the puzzle is still completely undone. And it's up to your system, how you how you fit the rest of the pieces in. And the indicators aren't going to fill the rest of those pieces in. They fill in like some initial things. Like for me, the only thing I have left on my chart is volume profile and VWAP, and I'm looking at like percentages over or under VWAP for like extension and exhaustion areas. So say I have a small cap that's 10, 15, maybe even 20% over VWAP, and it's starting to really get extended over that area. For me, like, okay, that's a signal for maybe I want to start looking for a short, but I still have more pieces of the puzzle. Now I need to start watching the tape. Now I'm looking at volume profile areas. Is this like well above like a heavily volume traded area? Is there heavy volume traded above this? And kind of piece the pieces together there. Now say it's extended, 15, 20% over VWAP. There's some heavily traded volume profile over that from previous days. Maybe I'm starting to look for an exhaustion, right? And so I go to the tape and I'm looking, okay, where are sellers starting to step in? Where's the buying getting exhausted because this is super extended? And so that's just one example of like the thought process that may be going on in my head, like while using my strategy. So
and I think
but isn't
right. You have to be constantly not just thinking about the trade, like this specific entry and exit, but you have to be watching the price the whole time you're in. Because the trade may be working, but if you're not paying attention to what the price action is doing, like your indicator is not going to tell you anything.
Yeah,
it's going to tell you after the fact.
Yeah, and it's price. Tape reading isn't everything either. I work in an office. Well, I was working in an office with a kid. He still works with us, but I don't work in that office anymore. But he really good buddy of mine. He and a stellar trader, but he doesn't use like a lot of tape reading in his trading. He's kind of a chart trader, but he freaking kills it, especially on like lower floats. he's just an animal. Like and he does really well, but he has this system like where he's looking for rejection points. He's looking and something that I've gone over with him is like, and when you're first starting trading, like consider putting your entry where you would originally stop out at. And now if you're experienced, that probably doesn't make sense. But if you're new and like you're constantly like, oh, I got wicked out here, like like yeah, you're paper cutting yourself to death, or you're panic selling, or you're impulse buying, things like that. And so one of the things he talks about all the time is that he's looking for areas on these low floats that on the chart is like, okay, like people are probably going to stop out here, but this is probably that's probably a liquidity event for whoever may be manipulating the stock. And so that's where he wants to get short, is where everyone is all the other shorts are stopping out. And he's got this system that works freaking great. Like, I mean, he's a super good trader, and super smart kid. But he doesn't take a ton of he's like, I barely look at level 2. I'm like, you're freaking crazy, dude. But
I'm the same way. When I trade, because I trade mostly all ES and gold futures.
Yeah.
Like I don't look at time and sales for the most part any longer. But there's so much. It's hard, when you're watching ES.
Yeah,
the volume of orders,
and it totally depends. I think like you can probably put more weight on tape reading in small caps or equities in general. If you're trading broad market stuff, you could. It just depends, and there's not one. I guess the point I'm trying to make is there's not one size fits all. So many different things can make you. So many different strategies can make you. I mean, there's endless strategies, right? The market is a place of endless opportunities. It's just it's the navigation that you have throughout it.
Finding the system that works for your brain.
Yeah, totally. And there's unlimited opportunities every day in the market, and so it's every uptick, like Mark Douglas says, every uptick and every downtick is an opportunity for someone to make money in the market. There's not one strategy out there that's going to work, and Skylar's strategy, Lucho's strategy, is not going to work for mine. Sorry, I'm using real names.
All right, bro.
Yo, Lucho, KillerT.
Yo, who's this?
This is Brandon. This is B Gum.
Oh, what's up, dude?
My boy B Gum.
Throwing it back. Yo, Lucho, you've been trading a lot of ES, huh?
Yeah, bro. Primarily ES and gold futures.
Dude, I was looking around for you yesterday. I was trying to talk ES with you, actually.
You always DM me, bro.
Dude, where are you at during the day? Are you in the chat, or are you just doing your own thing?
I mean, I'm in the chat. I'm obviously doing my own thing, but I'm in the chat. I try to share ideas or answer questions.
Yeah. I'm gonna be connecting with you guys some more often. I've been trying to get you learn a lot better, or you trade a lot better when you're in a team environment. So yeah, that's all I've been trading, Lucho. Like last time.
Oh yeah, bro.
Talked,
let's do it, dude.
Yeah, dude. I only trade SPY. I don't trade E-minis just because the margin requirements and everything. But which I'd like to.
Have good risk management. If I had traded futures 3 years ago, I'd probably be homeless right now.
Yeah.
Because the margin, the margin requirement is obscene, and you can lose your underwear pretty quick.
Right. Yo, real quick, I just took some notes on something that I wanted to share. Where do I put that in?
Group study.
Group study. Appreciate you.
What is your advice for finding a brokerage that works for you?
Raj, you cut out a little bit. Say it again.
How do you find a good brokerage that works for you?
I think that all depends on what you like to trade. So for me, when I was a retail trader, small caps were kind of like my like now they're currently my main focus, and so I was trading a lot of shares, and so I needed something that wasn't going to eat me up too much. in commissions, and when I first started retail trading, there wasn't a ton of options. We had stock trade, which allowed you to trade as the peer-to-peer platform or whatever, and it used to be really good, and now I think it's really crappy from what I hear. But you could have the unlimited day trades, but the platform was really crappy. But nowadays, you have a lot more options in terms of brokerages, with the whole free commissions thing going on. So it just depends on, I think, really what products you're trying to trade. So if you're trading small caps, like obviously something with like a zero commission is great, because if you're using a broker like, that whatever broker that uses per share commission, it's probably going to eat you up, especially if you're trading like a sub-dollar stock that you're trading tens of thousands shares on in a single day. Those commissions will totally eat you up, and that's what we want to avoid, especially if you have a smaller account. Now, if you have a bigger account, you're trading small caps, you can probably get away with it, especially if you get like rebate routes and things like that. You can kind of counteract those commissions with rebates, but
Not
I
something
think
most retail traders are probably messing around with.
Well, it just depends. Like if you're using like Centerpoint or Cobra or whatever, like you can stack up some pretty good rebates, but obviously those are ones that you have to be over that PDT requirement. And so, but now you have Thinkorswim, you've got E-Trade, you've got Charles Schwab, all these that are commission free, and so you really have you have a lot more options in terms, a lot more benefits with these brokers nowadays.
I've been loving TradeStation.
TradeStation's a great broker,
Dude. Really?
Yeah, I was using them for options and futures for a while, but pretty much right up until I started working for the firm. Great platform.
Lucho, are you charting on there, or are you
No, I mean, I have their platform, but I don't really use it. I actually linked it up through my TradingView account, and I trade through TradingView.
Yeah, okay, you trade through TradingView. Got you. Yeah, just executing through them.
Exactly.
I got you. Yeah, I actually opened up an account with them not too long ago. I haven't switched over yet. I'm still with Interactive Brokers, but I was a big fan of their charting platform, and so that was kind of like it wasn't pressing for me to switch over. But yeah, now I use a combination of TradingView and then Thinkorswim.
Once you can run your data through TradingView, in my experience, for futures, it's been a game changer, man. Like when you're dealing with lower volume tickers, or especially like smaller mid caps, TradingView charts look kind of ugly. But when you're dealing with something that's high volume, especially futures contracts, like the charts look pretty clean.
Yeah, are you able to actually get your data from TradingView through?
Yep. So when you pair your account, your TradingView data comes through. Your TradeStation data comes through.
Oh, what, dude? I need to do that dude, fuck yeah, okay.
So you don't have to pay for the extra data.
Dude, yeah, because the ES data is so fucking expensive, man.
Pop the Builder asks, since you are using our system to trade, if you short a trade and the volume profile is showing that there's huge buying and selling volume at the price above your 1R target, so what do you do? Do you take 50% off that? So you're saying for a profit, not for a stop. So if it's going in my direction and there's huge buying and selling volume, so say I'm long, okay. So if you are short a trade and the volume profile is showing that above your 1R target, are you talking about? I'm not sure. Are you talking about a stop or for profit? So for profit. Okay. So yeah, that's when trade management becomes this like fickle like thing, and there can be a lot of gray area here, and so and this is kind of like
for me.
Yeah, so this is like process of elimination is like, okay, first identifying what type of trade you're taking. Is this a scalp? Obviously like identifying targets is going to tell you like, okay, am I trying to like fade this thing all day, Or am I just going for certain targets? Is this like, am I looking for this to snap? It's all, for one, me, it's the behavior of the movement of the stock. All Day Faders on Twitter has a really good write up on his walk into profit quickly rule. And so if the trade isn't working as you expected right away, then either getting out of the trade or stopping out, or tightening the stop or whatever immediately is not a bad idea, because like you enter a trade because you want to see something happen, right? Especially in momentum, right? So for me, if I'm short a stock, right, and then it breaks a key area, but it only drops like 1 or 2 cents, like that's not what I want to see. I might have a good example of that. Let me pull up my OneNote really quick.
Who was the what was the account?
All Day Faders.
All Day Faders on Twitter. Really good follow if you guys don't follow him. He's
I'm actually looking through his. Okay.
Yeah, he's really good with like trading psychology and just a very realistic type of thinker. Let's see if I can.
Yeah, dude. What you're talking about is what I've been having trouble with. Is like I'm in the money, and then it's like, okay, well, how am I managing this?
Yeah, so I mean that's the thing. Like if something's not working the way I want it, so say it starts to, like, for me, I always get tripped out on things that are just grinding down, right? So if I'm or grinding up, right? Like I like to be like, I love momentum and I want to see big moves on breaks, right? Either breakouts, breakdowns, whatever. I want to see a big move, and I want to capitalize on that big move, and those are the types of moves I'm usually looking for. And so when I'm like, say I'm short something and it breaks a key level, like maybe volume profile is heavy where I'm short at, but then there's a huge gap of no volume underneath it, right? I want to see that thing wick down like crazy when it breaks underneath it. I want to see like all those previous buyers, puke all their shares out. And if it starts to just drop like 1-2 cents, like, why is this holding, under the after it broke under the support? That's not necessarily what I want to see. So I'm either taking some off or taking it all off, because that's not what I want to see. Lately, I've been taking just partials off and allowing it to stop me out, if it's going to stop me out, because sometimes what I'm seeing is, this isn't, this trade isn't originally going the way I thought it was. It's not breaking down as fast, but I'm gonna stay here. I'm gonna keep my place, but I'm just gonna lighten up a little bit. And if it's gonna grind down all day, that's fine. I would rather it not, because I'm an impatient prick. But if it's just gonna grind down, great. I'll just try and trail my stop to the best of my ability. And kind of get that bigger picture idea. But you have really what it is identifying the type of trade that it's going to be for you. For me,
right.
The biggest two things is like, am I telling myself, all right, is this a grind type of trade, or is this like a momentum, breakout trade? And if I get the opposite behavior, then I'm usually lightening up, right? Because like, that's not what I wanted to see. Like maybe like there's like a little more manipulation going on. Maybe this is like a short trap. And we see that happen all the time. And so it's literally like processing what's happening and allowing yourself to take a second, react accordingly. I used to overstay my welcome in those crappy situations. Is like, okay, like it's holding over support, I'm going to be short. Oh, it just popped up, stopped me out. But all right, I'm going to get back in. It still looks heavy. It keeps like popping over. And then I'm realizing like, oh, people are just accumulating this at this level. And I'm the idiot trying to short every time. And it just keeps stopping me out. And I'm just going to be down a bunch of money after 10 paper cuts. Right.
Yeah.
So like, the types of changes that happen in a scenario like that is like, okay, like, oh, I got stopped out once. Maybe I need to be a little bit less size because this is a speculation here. There's zero confirmation on the chart, right? So I got stopped out, maybe lighten up and widen my stop up, and maybe then it'll start to work if I give it a little bit more room and it stops wicking me out.
Yeah,
So
right.
it's really identifying one, like what are you trading? What is the vehicle that you're trading? Two, like what are you expecting this vehicle to do? And what are you going to do if it's not going to do what you expected?
Yeah, and I think for me, yeah, like exactly what you're saying is because I'll take a position, and then like I'm reading the price action, and I can predict the next 3 bars are going to be lower or higher, whatever it is, and I'm correct. But then I try to make it a trade to hold type of thing, especially in
Mhm.
this environment. That's just not been working for me. Trying to do these trades to hold, it's like,
Oh yeah,
and then
yeah,
then there's days where like when this rally first started happening, I was doing a whole bunch of scalping, and then I was like, dude, I need to be doing trades to hold here. And then past few days, I was trying to do trades to hold when I should have been doing a lot more hit and run type trading. And I can't tell you how many times this week I would be up like $200, and then all of a sudden now I'm down $100, and it was like, dude, if you would have just fucking done a hit and run trade there, you'd be.
yeah. I think you bring up a pretty good point. Is like looking at like the market conditions, like as a whole, is like, okay, what what type of action do we have? And like, is a longer type hold trade makes sense in this type of market, or do we have a lot of chop? If we're in a lot of chop, and that's kind of what we see right now, is like, we're very news driven. Headlines move the market, right? All it takes is like one increase, of New York hospitalizations or deaths or whatever, to like really like put a pretty big move and screw that all day hold that you were trying to do.
Right.
So I think for me, it's just it's an everyday battle, like search and destroy mission of one, you're trading defects, and two, being adaptable to what the market is telling you.
Yeah, man, I agree.
Yeah.
That was, dude, Tuesday. What was it? I think it was Tuesday and Wednesday really flustered me for like the rest of the week. Well, I guess it was until Thursday, but
Yeah, it's and that's where taking time, looking at your executions, and just constantly like looking charts and like comparing other charts of that sector of whatever name that you traded, and looking at how they're trading, and trying like identifying themes on a daily basis. If you can identify the theme of the market, then you can find your place in the market.
yeah, that's a good point, Killer. That's a good point. Yeah,
Yeah.
because I was just watching the leaders on like yesterday, for example. I was only watching like the leaders like Microsoft, Apple, Nvidia, and it was like, well, like a lot of those guys were just kind of doing nothing yesterday. Whereas, if you were looking at like with semiconductors, for example, semiconductors rolled over first yesterday. So if you had that context going into the day saying, hey, semis are giving a lot of clues as to what SPY is going to do today, or identifying
Totally,
like
man.
the overall,
Yeah. Yeah. Good. Bring that up.
Dude, are you trading for a firm? Did I hear you say that?
Yeah. I work for 7 Points Capital.
Do you really?
Mhm.
Dude, that's fucking awesome, man.
Yeah. Thanks, man. Yeah.
So
It's been cool.
I'm aware of them. Are you So how long you been doing that for?
I started with them back in September.
Dude, nice, man. Happy for you, buddy. Did you
Yeah.
have to get certified or anything? Get not certified.
Yeah. So if you ever want to work for a prop firm, FINRA changed up the testing, I think last year or the year before in 2018. Essentially, you take what's called the SIE, which is the Securities Industries Exam. It's a very basic entry level like exam, and you take that on your own. You don't need to be sponsored to take it, but you take it, and then you bring it to the firm, and then they sponsor you to take the Series 57 test, and then one which makes you a licensed securities trader, and then once you have that, then you can trade for a firm.
I didn't realize prop firms you needed to have your Series 57.
Yeah, you got to have the
Gotcha.
57. Yeah.
They've been providing you with I'm surprised to see you in here if you trade with them. Are they providing you with good education?
Yeah. And I mean, just because I work for them doesn't mean like, I don't, I still, I still interact with people in chat rooms and stuff. Obviously, I don't talk about like,
Only when he's not on his helicopter flying around the world.
Right.
no. But yeah, I still talk to people, still talk to new traders. Like, yeah, it doesn't, I'm not anything special. Uh, Ocean Grove asked, do you use hard stops or mental stops? I admittedly use mental stops about 75% of the time. But that's basically because usually I'm trading momentum, and whatever I'm trading, I'm hyper focused in. And if I'm trading multiple things at a time, that's when I'll start to implement my hard stops. And uh, but like if I'm trading momentum in a small cap, like I'm just so used to hitting out at certain areas, and for me, my stops have kind of evolved over time now, and especially now that I use size, I try and find like stops to where like I'm avoiding slippage and things like that, and so like I'm using tape reading as well to for hitting out on my stops. If I see liquidity right before like a breakout point, like I'm just going to take that liquidity and not even chance it. You know what I mean? Because I could get slipped, 5, 6, 7, 10 cents on something that I have way too, a ton of shares on. Would say way too many. But yeah, but if I'm trading multiple things, I'm using hard stops on the side. Now I know that I always recommend hard stops for, especially if you're new, just get in the habit of putting the hard stop in there and watching it stop you out. It's painful, I know, but you definitely don't want to get in the habit of like your Mr. Mental stop and then it breaks the point in which you meant to stop, and then you're like, oh, maybe I'll just give it up until here type of thing, and then that snowballs into you having to take out a loan to fund your next trading account.
I know, like for me, I'll speak from my experience because I'm trading futures so much, which obviously the margin on it is really large. I will have an emergency hard stop a lot of times in place that I don't ever plan on getting hit. I plan on stopping myself out way before then. But in case you run into some sort of trade paralysis, if something goes against you so quickly or whatever, it is nice to have a hard stop in there, just in case you're not able to get yourself out in time.
And I know for me, I experienced a trade paralysis last year, and it devastated my account. And then it was like moving forward from there, I was like, I don't have the right to be trading without a stop loss type of thing. So if I'm trading something, and I mean if I'm at the screen and everything, it's a small position, maybe I don't put a hard stop in, but so often I'm going to put in that like Lucho said, that emergency stop in. And also,
I think that's smart, and I should probably be having like at least like an emergency one like that's above, but for like I've had issues with doing that, and where I'll forget that I put it there, and then all of a sudden I'm long like all a full position on something I didn't intend to be in, and and
that's an issue. You're right.
Yeah. So, but that's just how my brain works. I always recommend hard stops for people. When you start to get the feel for, if you're trading momentum and like you have the discipline to be able to hit out of a stock. And that's it. All goes back to that emotional factor of like, even while you're in the trade is like, what's happening to the trade is not going to affect your predetermined risk point, right? Like, so like, oh, this didn't happen in the trade, like I should probably like, maybe it'll still happen, I'm just gonna like loosen myself up on the stop, I'll let it go a little bit against me. That type of thinking is super toxic, and you have
There's
to get
a
away
great
from
quote
that.
from Mark Minervini. He's some trading coach, whatever. And he says that a trader that trades without stops eventually stops trading.
Yeah, that's true. Yeah.
Yeah, I mean, because you eventually just run out of money.
Yeah. So, yeah, for me, if I had some sort of issue to where like my mental stops, like, in momentum, like were causing me to lose more than that 1R, then I would totally have to. That's a major issue. Like if I'm losing more than my what I originally predetermined as my risk, based on my R system, then that is a complete issue, and my equity curve is going to start to point down. It's just how that works. For me, like, I'll always put hard stops on things that are like moving slower, that are kind of in that grind mode. But how do you? There's a few questions I missed. Sorry, guys.
I'd say with the over trading, for Elnatron's question. Sorry, my push to talk is all junk.
No, you're good. Okay, yeah, Elnotron. How do you guys prevent over trading and form the discipline to sit on your hands when the setup is not there? Oh, okay, that's a good question. Yeah, yeah.
I would say for me, this is something that took me a while to figure out, and it really is just getting tired of over trading. I'll tell you that I trade mostly futures, and so futures are trading indexes or commodities, right? Gold, oil, natural gas, or the indexes itself. And so I'm not looking at a million tickers. I'm only looking at a handful. And there are times where I'm like, well, shit, like I just haven't had a trade opportunity. Not something that fits my criteria. And the reason I'm able to be patient now and wait for my opportunity to trade is because I've been so impatient before in the past and have burnt my ass. And you get to the point where you're just like, listen, I'm going to wait till the edge is there. I'm waiting for my edge to appear. And when my edge appears, I take the trade. If my edge doesn't appear, what am I doing? I have no edge anymore. So why am I taking the trade when my edge isn't present?
Totally.
So it just comes down to disciplining yourself. Nobody's able to teach you to do that. And usually that discipline comes from just agonizing disappointment with your own inability to be patient.
Yeah, totally. Yeah. What's as funny as so that there's this guy Riley that works for the firm. He runs the Toronto office, and me and him kind of talk to each other every day about like our trades and stuff. And that dude has taken one trade this week. He is one of the most like disciplined, like just super self-aware, and just he's kind of like he's super unique, in the fact that he follows this system so well that like it causes him to not take trades over periods of times, because like the lower probability setups that are in front of him just don't interest him.
And when he finds his setup, he probably just goes heavy.
Oh yeah, he crushes it. I mean, he's such a great trader, and he he finds reasons to enter, and he only exits when there is a reason to exit. And it's really cool to see. And he's a young kid. I think he's 26. He's younger than me. But he's just and granted, he spent like a year living with a really, really good trader, who used to be a Chicago hedge fund guy, and he like lived with him for a year and like traded with him. This guy Riley, who works for the firm, he runs the Toronto office for us. You could follow him on Twitter. He doesn't post any content though, but he does a trader takeaway videos for us too, which are really helpful if you ever figure what's up, dude. If you ever want to check those out.
Where are those at?
So the 7 Points YouTube channel, you can watch all whatever trader takeaways on there. Mike Katz, Riley, Stan, Krishna, all of them. There's a lot of good things to learn from those videos.
Thank you.
I would say one of the most important things, especially because most of the people that are listening are newer traders, is like you have to develop an edge first. If you don't have an edge in the market, and what I mean by an edge is a predetermined set of rules that when the situation arises, you're able to apply that set of rules and usually make money. If you don't have that edge, if someone says, "Hey, what's your edge?" and you're not able to answer that question, that's probably one reason you're over trading, is because you don't actually know exactly what you're looking for. And that's just been my experience that I've seen with a lot of people. They'll say, "Oh, I took the X amount of trades today," and I'm like, Jesus Christ, across multiple tickers, and it's because they don't actually really know what they're looking for usually. And then once you've decided what you're looking for, if you're still bored, you're killing and crushing the trades when they do show up, then that's a time to explore other edges and find edges that work maybe in other environments, and that's when you're really building your toolbox up of defined edges that you can use in multiple types of environments.
Totally. That totally makes sense. Ross had a question. When you're trading options and you are trading with lower volume tickers, do you lose more money because it moves sideways than high volume tickers? One good rule with options is only trade liquid shit. If it's low volume, that's not a good ticker to trade options on. What are your thoughts on debit call put spreads? They're good. Debit, you're essentially longing premium, credit you're shorting premium. So one of the basic rules that I follow is low IV, I'm long options, whatever combinations or spreads that I'm doing, and high IV, I'm looking to sell premium in some sort of like combination form, whether that's spreads or an iron condor. Or something like that. But it's pretty rare that I'm just doing like one single side. Like I'm either usually doing a spread or like a back ratio or like butterfly, whatever. Whatever makes sense. And the toss analyze tab for options and what type of strategy you're using is super beneficial. Ripster posted an emotion tracker. That's good. Did we have define liquid? What's your minimum for options liquidity? Ooh, that's a good question. I basically just have like a very one, I'll look at the options chain. If there's a spread on the options, I'm not too interested. I want it to be a pretty tight spread on the option chain. And then looking at the open interest, how many contracts are currently open in this name or on this contract on this price. And then really I just have like a kind of a handful of names that you have your BAs, your Netflixes, your Teslas, sometimes SPY options for me, but really like the high beta, high volume, Apple, even things like Nike and Kellogg and things like that, I'll sometimes do options on. But as long as that spread is tight and there's a decent amount of volume in the name, and you can look at it, candle by candle, if it's the difference between like Apple, right? Having like almost every 5 minutes, almost having like 1 million shares traded versus something like maybe like IRBT that has less than maybe 10,000 shares traded every 5 minutes. That's kind of what I'm looking at. How do you identify if it is a momentum or grinding type of trade based on the historical price movement? Just by that, like you just said it. You look at previous moves, the previous last volume day, last big volume day, and looking at the price action there. And then, if I'm looking at small caps, I could anticipate something trading, more grind style if they're, maybe diluting, or something like that. When you go in half size, then do you add when it goes down if you are in a short? If yes, then do you add at the break or the original entry price when it pulls back to retest your entry and fail? Oh, okay. That's a really good question. So normally what I really like to do is I like to put starters on in maybe exhausted buying areas, put some starters on. Maybe it's a lower high, it just had a parabolic move, and then it bounces, gives you a lower high. Then I'm trying to put some starters on, and then yes, when it starts to break a key level, then I'm adding onto it, the other half. That is ideally what I like to do. That way my average isn't at that break price, it's a little bit above it, and so like I can keep my stop in kind of the original position it was with my starters. What percentage of your trades are direct stocks versus options? Right now, like 98% are stocks, 2% are options. In January I was trading maybe like 30% options. But I'm still majority in equities. I don't always trade options, though. Repeating this question, do you have any set goal daily on how much money you should earn? If yes, what percentage? That would based on your portfolio size. No, I am not the type of person that likes to set daily goals. Like in terms of how much money I want to earn, I will, based on our system, if I take a trade, like I want to like obviously like make like multiples of, the R that I'm risking. But on a daily goal, like, no, I'm literally just going it trade by trade, and taking the opportunities as they come to me. I feel like a goal puts unnecessary, like a P&L goal puts unnecessary pressure on me. I do have like monthly targets that I do try to hit, based on market conditions. So like right now I have like a monthly goal just to beat my last month. That's just like my monthly goal. It keeps me motivated to work hard every morning and not slack on journaling or trade analysis or anything like that, which can be really easy to do, to slack off on those things. But I perform better when I do them. So I don't do daily goals, but little longer term goals is okay. But I don't want to have that unnecessary pressure on me while I'm trading. I think you touched on this already. Sorry if I missed it, but how do you determine your profit targets? A lot of it is either based on volume profile, or if I'm trading momentum, I'm just trying to follow it until it's exhausted. And that's where the tape reading for me is super necessary. What made you go less options now? Love that no profit goal. Don't cap your gains, though. Keep your stop tight. Yeah, totally. Yeah, I don't. I want to make as much as I can each day, no doubt. But I also don't want to like tell myself I have to make a certain amount. What made me go less options now is just the opportunities in the small cap market, and that's kind of my bread and butter. And so I'm putting all my focus into those. And right now, when things calm down, I will definitely keep working on my option strategies. When trading equities, do you trade micros to help manage risk? I'm not sure what you meant by that. No, Lucho, we can't hear you, or I can't hear you. I have been option trading shorts put in green 90% of the past 2 years, but it is in green 99.9. What? But it is a fixed income for me. Do you see how I can improve to increase my return more? Thanks. You have to rephrase that, newbie. I'm not sure what you mean. How do you utilize volume profile to determine targets? So volume profile is really good explanation in the volume profile or volume price analysis book by Anna Coolin. She talks about it at the end of that book. But basically, you're looking for I wonder if I can post like let me find a good chart. Okay, this is not a bad example, I guess. Let me post this really quick, you guys. My charts are all weird right now, but I'll do my best here. This is kind of a lower volume. It's not that bad. So this chart is just very basic. You see, something, it starts running up, hits resistance, it tops out at that 631 level or whatever, and then it pulls back, right? And then it pulls back where? Into that heavy. You see that the blue, sideways bars are the volume profile. It pulls back into that heavy volume traded area, and then it starts to get weak. And my target, right, if I'm going to short this thing, is the next volume, that 2 arrow, right? So if I'm shorting where that 1 arrow is, I'm looking for a break down to that 2 arrow level, right? And then if it starts to look weak under that, right, I'm looking for gaps, and I'm looking for heavily traded levels. It's very simple, and volume profile isn't everything, but it is a very useful tool, just as much as the volume, the normal volume that you're used to looking at, as well. But it's definitely a helpful tool, in my opinion, knowing where people are buying and selling most at what levels. So yeah, if you get like a big gap up on something, and then there's a heavily traded volume area, like different levels of it, that bottom level, like underneath it, like you might expect like a real big flush underneath it. If there was if that was a big gap area. All right, guys, I'm probably gonna get off here in like 5 minutes. So if anyone else has any other questions, in momentum, do you buy breakouts or dips? Yeah, that just depends on how the name is trading. I'd have to go over like specific examples and stuff, but ideally, I'm trying to get starters, and then I'll buy. I don't mind buying breakouts, but I'd usually like to do it if I have a better average than the price that it's breaking out at. Because I used to just solely wait for the break of something, and then I'd be in a full position, but with a worse average. So I'd rather have like a starter in anticipating a break versus just going all in on the break. What does slam the bid mean? It means
slam it, baby.
Slam it. There's a 10,000 share bid, and you want that thing to go away, and you want it to break. Just 10,000 shares. I'll take that off your hands, bud. Do you have a diet regimen for quarantine? Yes, frozen pizzas. Yeah, no worries, Diesel. When trading equities, do you trade micros to help manage risk? Oh, I don't trade futures anymore. Lucho could probably touch on that.
Futures, margin requirements, micro requirements per contract. I don't trade equities super often. I trade mostly all futures. The cool thing about ES and MES is that you can hedge your ES trade with MES. So, let's say you want to go long the market, right? As you just posted, ES is it's a high dollar ticker, right? You're talking $5, $50 a tick. So, you can go in long with an ES and counteract that trade short 2 MESs just to help you manage risk. But at the end of the day, if you're doing that, you should probably just be trading MES instead of worrying about getting in and out of 2 different contracts in different positions. Of course, you can always, if you don't know if you're trying to go long or short, you can place your bet on ES and on MES and cut the one that you're wrong on, but that just seems silly to me.
I heard you have to be very careful with that if you're doing it from the same account, because I know a guy who got fined from the SEC because he was increasing volatility, trading both micro and the minis in different directions from the same account. You can do it from different accounts, but from the same account, I think there's a requirement for
I mean, you got to be hella balling if you're creating enough liquidity volatility out of your retail trading account in the ES market. I mean, like I'm not pushing that many contracts, you know what I mean? So like throwing a 10 lot out there, like nobody even knows. The 10 lot just disappears and evaporates in moments. That's one reason I love futures so much is I mean, your 10 lot position is literally nothing.
Yeah, I think he was rolling with like 50 lots. So
Yeah, I don't know. I haven't heard of that happen, but I mean, I imagine the government's always trying to get you for something.
Jason, posting a screenshot here for you for the volume profile. I believe this is what you need to change it to. So you go to the edit studies and edit volume profile, and then on expansion, I think you put no, I believe. And those are the rest of my settings right there. I have it on day for my main chart, and then tick size 1000 for the profiles, things like that. But yeah, to put it on the left of the chart, there's that. Ben, biggest difference between trading. Yeah, I love you, Ben. Ben's an OG. Biggest difference between trading professionally and trading on your own. Best advice to your trading on your own person. Lucho, I was talking about this to you yesterday. Is like one of the biggest differences that I started to experience when trading, for a firm was I didn't want to fuck up. I have people who are, the big dogs in New York can see my trades that I'm making, right? And so taking low quality setups was, for me, like, that's a no. I don't want to look like I'm, like trading like a complete noob. And managing my risk, not letting anything ever go against me. As to where on my own, it's so much easier to justify, letting something go a little bit longer. And that was, obviously a really good transition, but something that I could have been better about on my own. Not to say I wasn't disciplined on my own, but you start to be more. I definitely started to be more selective, but in terms of like my trading style, very similar still. And that, I mean, I think that's probably why they hired me. But because I had a system that was working, but I'm definitely more selective now, and just the atmosphere of being in that firm and being with guys who've been doing this for 30 plus years, and just and seeing how they operate and what their routines are and the type of discipline that they have is totally priceless for sure. And you get that in any group, here in UT, when I first came here, it was trading with a group and having people that you can express your faults to, is really key. And so you can get a lot of that same stuff as you would working with a firm as you do like working with a group. One, you just have to be honest. If you're struggling, reach out to someone who's willing to help. Two, objectively identifying the edge every single day. Because if you're just kind of blind trading or shooting from the hip type of stuff, that's just going to get you in trouble. And for me now, like, not only will I lose money, but like I'm going to look bad at my firm, and that's like that's the last thing I want. I want to look like I'm managing my risk properly, and I don't want to just look like I am. I want to be doing that, obviously. But yeah, I think those are probably the biggest differences. Otherwise, like we have some benefits in terms of like locates and things and routes and things like that. But other than that, you can develop the same type of discipline and trading group as working for a firm. For sure. You can do that on your own. Absolutely.
Holding yourself accountable, like you said, is so important. Lying about
totally
doesn't benefit you.
Yeah. And groups like this are important, especially as a trader. It's if I didn't have some of the guys that I've surround myself with in trading. After taking a big loss like I did this week, I wouldn't have been able to bounce back. I don't think like I did, because when you are able to share your faults with someone, it's they're able to pick up on things that maybe you may not be able to pick up on, or you're just expressing it in a way that allows you to come to terms, or have some kind of a moment of clarity, as to where, like, if you're just in your head, and you don't have people around you that you can be accountable with, that can be detrimental, and you can bottle that up, and then one day, all it takes is one trade to really like blow the top off, and then all of a sudden you're down 60% in your account value. Thanks for no worries, you guys. We'll end it with that, you guys. With when TJ gets back, we'll set up a time to kind of do something with him, and we can make this more frequent. I'm going to start working remote for the time being. I mean, I have been working remote because of the whole quarantine stuff, but I'm no longer going to be working in an office for the time being. Going forward, I think me and Lucho might be setting up shop in Arizona here in the near future.
Yeah, boy.
But I'll have a lot more chances to do stuff like this. And if you guys have any questions ever, you can I'm gonna with 7 points, I might open a new office, potentially.
And I'm going to try to set something up. I know we talked about it earlier in the week, TJ. I'm going to try to set up a little hour where we can kind of go over my old video and kind of make it new and refresh a couple ideas. And I know a lot of people have been asking me after they've been reading the articles from Linda that I post, wanting to know more about that strategy, like in real time. So we'll set up something where I can kind of review that strategy specifically,
Sweet,
for the people that have asked.
Yeah. So we'll be able to do more of this stuff now that I'm not in an office with a bunch of other guys. So we can do this stuff more often, you guys. So no worries, you guys. Glad for thanks for everyone that came out. Again, if you have any questions, DM Lucho. He will answer every single question that you have. Always.
All day. That's actually all
day that he is waiting by his phone at
literally
every second.
Sitting here waiting.
Yeah, he's just breathing like a dog waiting for a snack. So all right, guys, I appreciate all of you. Have a good long weekend. See you next week.
Enjoy the day off, guys, from the market.
All right, see you guys.